Okay, you're ready to start shorting in a bear market, but you don't know what to do. This one simple trick will literally save you hours of time because you've been conditioned to buy the dip in bull markets and you're not comfortable understanding where to short. Well, all you have to do is invert the chart. It's literally Alt I on a Windows or Option I on a Mac. Now, this might mess with you a little bit because the lower down we go, these are higher numbers, and the higher up we go, quote unquote, these are lower numbers. You might see people trying to um, get people like, rage bait people on X and stuff like that by posting charts like this. And they're like, yeah, things are going to go to $1 million. But the reality is that shorting in a bear market works way better if you are able to invert your chart. Why? Well, I believe it was Charlie Munger that said, when in doubt, invert, invert, invert. And the reason why this is such great advice is because when you invert the chart, it literally inverts your bias, where you're looking at things thinking, well, I'm just going to buy the dip here at Bitcoin's, umpteenth drop down here to $90,000. It could very well bottom from here. But the reality is that by inverting, I'm actually going to be able to go with a bullish bias, go, wow, that's actually breaking out, which means that it's breaking down, which means that there is a strong uptrend right now, which means a strong downtrend. You get the idea? So you're inverting everything. But by looking at the chart this way, because we've been conditioned to identify bullish breakouts, bullish looking charts, this is actually a hack that helps you to find optimal entries for shorting. So one tip I want to give you on shorting as well is to use faster time frames. Shorting on the daily time frame is great. You don't have to use the TBO. You could just use like a moving average. We're just going to do moving average simple. Awesome. And we're going to do a 21 period moving average just because blackjack. Okay. Now, the reason why this is great is because when we get a 21 SMA move, and again, it's going to matter chart to chart, but these typically give us some really good entries to enter a long-term short. But shorting in itself is tricky. Let's say that you miss our generational entry for a short position here. Well, the reality is that you can still enter, but you're going to want to enter on faster time frames. For instance, again, you have to mess with the SMA on this, but if we're looking at this with an inverted time frame or an inverted chart scale, this actually makes it a lot easier to see, oh, wow, there is an uptrend, which is going to be a downtrend. So when I see the chart pulling back here, whereas if we're looking at it like this and our value and our wealth is disappearing before our very eyes, when we're looking at charts like this in an inverted fashion, we're able to see, well, there are opportunities with this very clear uptrend. Now, again, it's going to take some time, it's going to take some practice, but it's going to work the same way as if things were actually bullish. This is how it works with the TBO. For instance, in a bullish market, we're having a bullish uptrend. We're going to be looking for bullish reversal signals like the TBO close short right over here, which is a bullish reversal signal. Okay. So this is giving us our early entry. This is giving our confirmation of an uptrend. Then we have breakouts here, which is letting us know on a faster time frame to expect more upside continuation. So getting in early pays off really nicely. So let's say that we want to invert it mentally. Now we're going to be looking for opposite signals. We're going to be looking for TBO close longs, which don't see any over here because it's the 4-hour, but we do see some bearish continuation signals like TBO breakdowns. So whether you're using the TBO or you're just using an SMA, you could still use it in the same concept, but you just want to make sure that you're finding a good length that matches the chart. The other thing to consider as well is that if you're actually going to get into shorting, you still need to use the same proper risk management strategies that you've been using this whole time, right? So what I mean by that is using at least a 2-to-1 ratio, or it says risk reward ratio here is at like 2.04. You want to be here. Some people that talk about, using leverage in futures, they do a 1-to-1. And the problem with 1-to-1 is that you're risking one lot to earn one lot. You don't have really good risk to reward management on this. Whereas if you do something that's too tight, like 10-to-1, that means you're most likely going to be stopped out. Again, we already know crypto is already volatile. Okay, so usually 2-to-1 is like the lowest that you'll want to go in terms of risk to reward. So again, you're risking one lot in order to make two, or you're risking $100 of loss in order to make $200. That's essentially the idea. Now, just to quickly explain, again, invert, invert, invert. If you're still struggling to look at charts in the same fashion, okay? Look at charts. Actually, that's funny. I have to do it like this and then add it like this to short. There we go. So use this invert trick. It's going to really save you a lot of time. It's going to give you some clarity on the direction of the trend. It's going to help feed into your previously bullish bias to see charts in a bullish way. But in reality, things are just falling lower. Now, the last thing that I want to tell you about this too is that you can, of course, zoom in on much faster time frames. Momentum trading becomes really powerful for scalping and things like that. But understand that crypto is already volatile enough. And if you're taking a quick little a short position like this, looking to make some money on a move down, don't be surprised, like over here, getting in at this little entry and having a really tight stop. Don't be surprised that you're going to get stopped out over and over and over. Crypto is literally designed to liquidate everybody and anyone in either direction. There will be ridiculous candles that literally are going to do something like this, where it's going to go up and, oh, come on. It's going to go up and down, literally over and over. They're going to be BARTs printed all over on the charts. So please hear me out loud and clear. While you can make good money shorting the market, another thing to consider, aside from inverting these charts, is to also just zoom out to identify long and strong price-based resistance and support levels, and just place your buy orders there and chill. The last thing I want to tell you about shorting the market is that you are always limited to how much money you can make shorting. The reality is that crypto is extremely volatile, extremely overly emotional. So we know that it's not impossible to see Bitcoin crash 20% in a day or alts to drop 50% in a day. But the reality is that even if you got the Pico top at $126,000 and you shorted from the very top, you're in 28% profit, which is incredible. Vice versa, if you got in at the beginning of a rally and you're going to be writing it up higher and higher with the expectation that BTC is going to be going up, or let's say you're actually going to get into that low down here at $73,000, expecting this to be the perma low, which it's not going to be. But again, getting into these rallies, you aren't capped on how much money you can make in a long position. But for a short position, you are 100% capped, meaning that you literally cannot make more than 99.9999999% when you're shorting. Yes, you can capitalize on fear, but it comes with an extreme cost because you will literally get whipsawed in both directions, and you can make so much more money when you long, which is why everyone has been preconditioned to go long, okay? There's a time to go long, there's a time to go short. So if you're struggling with trading bearish conditions right here and you are wanting to short, consider inverting. Consider zooming out to identify long price-based support and resistance levels. Consider using an MA, a moving average, or even the TBO indicator. But the point being that even if you're going to short, just like if you're longing, you need to use proper risk management, at least 2-to-1 ratio. Now, I talk about all this stuff way more in our courses at The Better Traders, particularly in the Smarter Trader course. You don't have to take the course, but this is an advanced active trading course that you guys should definitely keep an eye on. It will help you with scalping, with shorting, with using leverage properly, safely. It also comes with a trial to the Better Traders Club. It also comes with access to the TBO Pro. And there are also links down below to sign up for Phemex and BYDFi. You will need an exchange to be shorting this market. Both of these have some crazy offers for you to make money while you're trading this crazy up and down market. So make sure when you invert, make sure that you're changing everything. You're literally inverting everything that you're doing. Make sure that you are not abandoning proper risk management. And remember that you are capped in terms of your gains when you're shorting the market. You can make way more going long, but there's a time to long, and there's a time to short. Before you go, watch this video. And until the next time, you know what to do. Stay awesome and stay in the green. Peace.